right now. Boom, there we go.
All right, we're starting up now.
Yeah, let's do it. Let's make it official. Let's make it happen right now.
All right, what's up, guys? Again, we want to welcome Greg and thank him for his time. He's the founder and the CEO of Tradervue. And just a quick background to run through really quick. Greg founded a company called NewsGator in 2002, which later became known as Centurion, which is a software company. So there's a background in computer programming when you first started trading. Is that right?
Yeah, I've actually been doing software development my entire career since, well, I don't really want to say since when, back in the 90s.
Awesome. And then when exactly did you start trading?
I started to, I started to really trade actively probably in like 2010. I spent after I left NewsGator, I was sort of attracted to trading. I thought, I'm an engineer. How hard can this be? I can be a genius trader and make millions, in the first year by then for sure. And, I found it was, obviously, as we all know, much harder than I originally thought. And but along the way, one of the things I found was I had started keeping a trading journal just in like Word. It was actually in Pages, which is just a word processor. And, every day I would like copy and paste in all my executions, all my charts from my trading platform. I would make notes in there and stuff. And I really found it became a super valuable tool in sort of learning and improving my trading performance. But, oh man, I hated doing it. And it was mostly at the end of the day, it was all the busy work, like copying and pasting all my executions from my trading platform and copying and pasting charts and trying to find the charts if I had forgot to screenshot them earlier. It was just a huge pain. And that's sort of what led me along the road of building Tradervue. And I originally actually just planned to build it for myself, right? I just wanted something to sort of objectively analyze my performance and help me keep a journal. And so somewhere along the way, I sort of got distracted and built Tradervue for everyone.
You mentioned some of the stuff that was available back then before you started that. Can you explain one of like the popular ones that was available? And
yeah, there was only one that I recall, and that was Stock Ticker, spelled like Flickr. But it was, it seemed fine. It really felt to me like it wasn't designed for the active intraday trader. If you make maybe, 50 trades, 100 trades a month or something, maybe it would have been fine. I never got too far into it because I might make 100 trades a day, right? And there weren't any tools on the market short of, institutional tools that were really designed for the super active trader. And you guys probably know, right? If you're making 10, 20, 50 trades a day, you don't have time to, enter them all in manually and stuff, right? There's a lot of busy work that you really need to find a way to automate. And that's sort of, part of what led me down that path. The other thing I wanted to do too, as I got into it, was really find a way to really understand my performance. So, your broker will tell you whether or not you won or lost money last month, but they won't tell you what's really working for you. And with a tool like Tradervue or some others, you can really sort of dive into things and really try and understand, what's working. And I have some examples of that I'll show you later where I thought I was a genius and not so much.
And at what point did you realize that journaling was so important? Was it, you said you met a group, you started trading, you were just kind of messing around until you ran into quote unquote a smarter group of traders online. Was that a chat room or was that individual traders?
It was kind of a mix. I think I did what a lot of new traders do and sort of hopped around between, why won't this window go away? There we go. Sort of hopped around between different, services and different rooms and things like that, trying to figure out what was really going to work for me. And everyone has a different style. And you know what? I will be the first one to tell you that you can subscribe to someone's service. You can take exactly the trades they tell you to do, and they will make a ton of money, and they'll post online about what a genius they are, and you'll lose money. It's definitely possible, and I can prove that. Yeah, should you be so interested? So anyway, I sort of hopped around and tried a few different things. At the end, the last thing I did in terms of sort of trading with a group was just me and another guy. Actually, the idea was to kind of form a virtual trading firm of sorts. So we would have like a conference call open during the day. We'd be calling out ideas and things like that. And that worked pretty well. The key, though, that I didn't really get at the time was that everyone needs two things. Everyone sort of needs to be trading the same general plan. So if one guy's planning on doing a swing trade based on, intraday fundamentals or something, and one guy is looking to, scalp from the tape or something, you need to kind of be on the same page. Otherwise, it's less useful to sort of be in a group calling things out. And the second thing is, just because your friend calls out, some trade or something, it doesn't mean that trade's necessarily going to work for you. I think everyone needs to look at a setup and kind of internalize it and say, is this a good trade for me, right? Maybe it's a textbook perfect setup, but I don't trade this setup very well. I'm going to pass on this one. That kind of thing is sort of, I think it's the kind of thing that only experience can sort of teach. And I think the goal when you're first starting out should be not to lose too much money while you're learning the stuff.
Gotcha. Great answer. And then when you started, when you did start journaling, was there phases? Did you just start off kind of just simply recording your trades and then kind of move into a different tier where you got a little more detailed about your entries and did you quickly see an improvement after you began the journaling process?
I wouldn't necessarily call it a quick improvement, but I would call it, I started to learn a lot more and understand what was going right and what was going wrong. I was pretty liberal. I was pretty liberal about writing, why was I getting into the trade? How did I feel? How did I feel during the trade? Was I nervous? Was this, did I get in this trade bigger than I normally did? And was I, just a nervous Nelly the whole time through? And as soon as there was an uptick, I sold 90% of it or something, right? Sort of, it was a matter of just sort of trying to record enough information that I could come back later and remember what it was like when I was in this trade. I don't know if you guys read a lot of trading books and stuff. There's a book by Mike Bellafiore from SMB Capital called One Good Trade that I would recommend every intraday trader read if you're so inclined. One of the things he mentions in that book is the idea of, you've all heard the old idea about it takes 10,000 hours to become an expert at something. He sort of, and whether or not you believe that or not, he sort of extends that to the idea of 10,000 repetitions to become really good at something. So for example, if you're trying to get really good at making free throws in basketball, maybe you need to make 10,000 free throws before you can consider yourself competent at doing this. And you can sort of extend that to the idea of I need 10,000 reps in my trading to really become competent and really understand what it is I'm doing. The problem is that it takes a long time to make 10,000 trades. And, if you're not very good at it, anyone's going to run out of money before they make 10,000 trades, right? But if I can make one trade during the day, and then later on I can write about that trade in my journal, and then later on I can review that trade and sort of, have enough information that I can get back and remember what happened during that trade. And then maybe at the end of the week, I review that trade again. Well, instead of 1 rep, maybe that's 4 reps now. I kind of got more value out of that one trade. I got more reps out of that trade by sort of going back and doing it again by reviewing my journal in a really sort of detailed and methodical manner. So I forgot what the question you asked was, but I think that was one of the keys for me as well.
Yeah, I agree. I mean, I'm starting to see now, I was explaining to you earlier, Billy has been hammering to us, to keep a journal, and I was reluctant to do it at first. I didn't know why I needed to be doing it, and I did it reluctantly, and then I started seeing results. And it's just occurred to me that, if you treat trading like a business, a small business, they keep books. They know what products they have on their shelf. They know what sells. They know what doesn't sell. And if you're not doing that, it's basically like you open up a store, you have no idea what products you have on the shelf. You don't know what's selling. You don't know what to order, what's working and what's not working. But that being said, have you ever met in your years anyone, a successful trader that just refuses to keep a journal? They just can pull it off without going back and reviewing their trades?
You know, I'm sure there are some. I don't know any personally.
Right. Okay. And I had one other question. Let's see.
I think the most important part too about keeping a journal is to keep it. Not necessarily how you keep it. You know, obviously I think Tradervue is by far the best way to do it. But even if you just write down in a notebook these things as you go, that's way better than not doing it at all.
Yeah, agreed. And and also I wanted to ask, do you have any unique stories that you could share with us that traders that use your site in a way that you had not thought of before, that you either implemented yourself or actually developed into software because, you know, that it had not occurred to you that you saw as a con?
You know, the one that comes to mind is actually a guy who he was a really sort of analytical kind of person. He spent a lot of time. So he like signed up or purchased like this trading plan, you know, like some of us do, and tried that. And what he did is he went through and back tested that system and logged all of his results in Tradervue, and then used that to analyze, you know, whether the system was really working for him or not. And it was super valuable. There's actually a post on our blog that links to a long post that he made analyzing the system. You guys are cracking me up. So I'll send you a link to that if you want, and you can look through that and see how someone used it in a way that, you know, I didn't originally think of, but he did.
Yeah, please do. That'd be great. So I guess if you don't mind, we could go ahead and get into the meat and potatoes of the Tradervue platform and different ways to use it. I was explaining to you earlier when we were talking that I think most of us are pretty much experts at logging our trades in, importing the trade, you know, making a tag or creating notes in there. But beyond that, when it comes to running reports and getting into the detailed reports and all of the features there, I think that would be where a lot of us haven't really dove into that part of the website yet.
Okay.
If we can just walk through the different parts of the website like we did before, if you want to take it away, please do.
Okay. Cool. And if I go too fast or you see something interesting you want to talk about some more, just stop me. But everyone on the call, whether you've used Tradervue since the beginning or not, I promise, well, I try to promise that you'll learn something new during this, so don't go away. Okay, so the dashboard, this is where we all get started, right? I'm not going to spend too much time here, but you know, we have a summary of the current day. If you made intraday trades on the day, you'll have a running P&L chart up here, which is handy. Let me show you some of those. Here's an example of a running P&L. Can you guys see my cursor? Am I just waving this around for myself?
Yeah, we can see it.
Okay, cool. So here's an example of a running P&L chart. The reason this might be interesting is I can see my overall intraday drawdown or run up. I can look at this in the context of, you know, I made some trades in here between say 10:45 and 12, but I made them in the context of already being down. So maybe I made them somewhat defensively, or if I was already up, maybe I was pretty confident by this time. You know, it's something you can look at in the context of your performance and see, you know, see if whether you're up or down is affecting your decisions. So that's always good to know. Some of the things I'll show you in this, by the way, are obviously going to be on the silver or gold plan and not on the free plan. But if you haven't done one, there's always a trial, so you can always try this stuff out. We're on the journal view, by the way. The idea of the journal view is to group all your trades by the day they were on. And then, so you can see, we'll go back down to that one we were just looking at. So you can see we have notes that I made for the day as a whole, and then we have notes that I made for each individual trade. These are really two different things, and you don't necessarily need to make them both every day, but it's worth thinking about. There are things, maybe it was a Fed day or something, right? And you made 3 trades right after the Fed announcement, or something along those lines. Maybe the market was moving pretty hard on you and you want to make notes on the day. This is the place to do that. If I flip over to the trades view, this is probably where you spend a lot of your time, if one were to guess. So this is sort of like a spreadsheet view of all your trades, right? And you can change which columns you're going to have on this to whichever ones you want to see. And I'm just going to jump into one of the trades because you guys use this tool every day. So let me flip into this one. So here, at the top, these are notes. Be liberal with your notes. Talk about, I wouldn't just regurgitate the information that's already available on this page. I would write about, why did you get in this trade at all? Whose idea was it? Does this trade work for you? Do you think of this as an A+ setup for you? Is it a B setup, a C setup? However you kind of rate your ideas, make some notes about that. Remember, you want to come back later and really remember what was going on in this trade. Over here we have tags. I would really suggest being liberal with your tags as well. The low-hanging fruit for tags is tag every trade you make with the setup it was. So if this was a support play or a pullback trade or a momentum trade, tag your trades with that. Later, you'll be able to come back and say, how did I do on all my pullback trades? Or how did I do on my earnings trades or something?
Yeah, can I jump in right there real quick? Greg, I think that's super important that if you have certain plays that maybe don't have a name, give them a name because the tag, the setup that you're taking with the name, that's the only way you're going to be able to go back later, that I know of anyway, and do statistical research on that particular setup and the percentages of times it works. So even if you have to come up with just a dumb name, make sure you name every setup something. Would you agree with that?
Definitely. There's a reason you entered every trade, so record it, right? Maybe you just have a feeling. Well, tag it with feeling, right? You'll be able to come back later and see whether your feelings are on or whether they're not.
Feeling good.
So what we have down here in the middle, this is the actual individual buys and sells that made up this trade. We'll record them all for you so you don't have to. Right below that is some interesting statistics that when I was talking to Jeff, he found this interesting, so I will go over each of them quickly. So MFE and MAE, the idea of MFE stands for max favorable excursion. This is basically the maximum run-up that the trade made while you were in the trade. So how good did it go? How much did it move in my favor? Conversely, MAE is max adverse excursion. This is how far did the trade run against me while I was in the trade. So let's take a look at a chart and we'll look at an example. Here we go. So here, this is a 5-minute chart of a trade. You can see I entered right here at 40, 70 something. And then it came up here, came down here, and then I sold some here and sold some here. Right? The trade was probably a small loss. I'd have to go back and look. But so the MFE, the max favorable excursion, would be my position value when it was up here. This is the best spot. My MAE, max adverse excursion, this is how much did it run against me at the worst point. And that would have been down here, right? Where I had the maximum drawdown during the trade. And then I sold here and here. So in Tradervue, we show 2 different MFE and MAEs. We have a position MFE and a price MFE. Position MFE means what was my position value at the time of the maximum run-up? So what was my position value right here? And then price MFE was what was the price movement independent of position? So in this case, the price movement was 40.75 up to 41.25, say, so it was about 50 cents. And the price MAE was 20 cents or so. The position MFE and MAE would depend on how many shares I had on at each of those points.
Hey, Jeff. Can you hear me, Jeff?
Yeah.
Hi, I just have a question. Just because you just showed us the chart, could you now, you've explained the MFE and the MAE,
Mm-hmm.
could you now just go through your notes and talk us through your trade on this particular BBY and, make us understand why you got out when you did? I just want to get your frame of thinking with trading. I don't know.
Yeah, it's going to be a little tough. This trade was 4 years ago, and I really have no recollection.
Yeah, Sean, right now we're just kind of going through the functions of the website.
Yeah. I mean, if you have a recording, or you can take a screenshot of my notes. I'm not sure how super helpful they're going to be. Yeah. I should preface all this with telling you that I'm a much better developer than I am trader. So I wouldn't necessarily use my trading prowess as a guideline for anything in the world.
Wow. Like me. Thank you.
Okay, so that was MFE and MAE. If I flip over, so we've seen the price charts. I'll come back to exit analysis in 1 second for the best exit.
Yeah, you guys, this is interesting. I didn't know about this part right here. You're about to do running P&L, is that right?
Yeah. So we're looking at the price charts right here. If I click on this other tab, running P&L, what we're looking at here on the left side, this is the running P&L chart for this trade. Okay. So it started out in the green. I was feeling good. Then it came back here, started to draw against me. I'm like, oh no. Then it bounced around a little while, and you can see I sold some here and sold some here. So basically, this is sort of, just within this particular trade, what happens. The right side, this is my running P&L chart for the entire day. So you can see, I was up on the day, then I was down a little bit. The yellow window here is the time frame that this trade occurred in. Okay, so I may have had other trades and stuff, but this is the time window that I was in this one, and this was my overall running P&L for the whole day. So you can see this doesn't look exactly like the one on the left, but it includes the one on the left, if that makes sense.
And so you can sort of base what your pain tolerance may have been relative to what was going on big picture at that moment.
Right. Exactly. Right. Okay. Then let's flip over to another trade. So this one, I can tell you what I was thinking. This is one of those trades that stuck in my mind for 4 years, 2010. For 7 years later, I could tell you almost exactly what was going on in this trade. So were any of you guys trading in 2010? If you were, you might remember this day in Visa where, it's just going along, it's doing its thing, and all of a sudden the bottom falls out and it drops $12, right? This is Visa, right? This isn't like a little penny stock that drops $12 every day. So anyway, I'm watching, and I happen to have this chart up on my screen, right? And I'm watching it, and I traded it so badly, and I was so frustrated that I have never forgotten it. So anyway, you could see this is how, but I'm not telling you to lament my trading skills. There really is a point to this discussion. So anyway, this is how I traded it in reality. So you can see I sold some here, covered almost immediately, sold some in here and covered, and then sold some more here and then covered $2 or $1 later. And then I was out of the trade completely while it dropped another $10 without me. So, so I wanted to use this to illustrate the exit P&L. So what we did, we exited this trade for a $75 P&L. You can see the best exit calculation was $812. So I extracted 9.2% of what was sort of the pickings available for this trade. And the way that's calculated is, I'll pull up 15-minute chart here. If I made the trade exactly like I did, but I take the last closing execution and I move that around in the trade, how good could it have gotten, right? And in this case, best case, I could have covered down here at maybe 66.60 or whatever that is. So that would be the potential best exit. And not, we can't always cover on the low tick of the day or the high tick of the day. But this at least gives you a feel for, this was a 9% efficiency. It at least reminds me that, I should go back and look at this trade and see if there was something that told me I should have exited when I did, or maybe one of my rules should be adjusted, right? So there's always a difference between evaluating your performance and evaluating your trading plan and your trading rules. When you're evaluating your exit, it's a little bit of both. But in this particular case, it was more an example of, should I reevaluate my trading plan for trades like this about when to exit? So this is sort of an extreme example of where the exit analysis can really sort of surface something right up in your face that indicates something that I should go back and look at further.
And just real quick, how did we get to that? Is the gold plan? It's just one of the features that's on there, the exit.
Exactly. The exit analysis is part of the gold plan.
Okay.
Another thing that's part of the gold plan is what we call risk reporting. So the idea of R, or risk, of course, is how much am I going to risk on this trade? In this particular trade, I was risking, when I entered the trade, excuse me, when I entered the trade, my intent was to risk up to $100. That was going to be my stop, okay? I ended up closing the trade for 75 or 0.75 R. All of these different calculations can be done in terms of R as well. So, for example, my best exit P&L is over 8R. R is if you guys aren't doing it right now, R is a great way to sort of normalize your performance against the risk you put on. So, you might have a trade that returns, some, maybe you have a trade that moves $1 in your favor. And if you're risking, I'm just tying myself up in knots. But if you have two trades, right, each of them have a 30-cent stop, let's say, one of them may be a much better trade depending on how much actual dollars you have at risk versus how much dollars you actually got out of the end of the trade. Okay. I should stop obsessing about the chat because there's too much in there. I can't look.
Greg, okay. we don't use R that much in our group, but we don't talk about it at least. Can you just give a one sentence, what R is, just really quickly? Yeah.
So the idea with R is, so you always have a stop when you enter a trade, right? Maybe your stop is going to be sort of 20 cents away from where you entered, but you also have a size, right? So let's say you have a 100 share position with a 20-cent stop. So what you're basically saying is, I am willing to risk $20 on this trade. If I get to minus $20 in P&L in this trade, I'm gonna exit, right? In that case, $20 is your R for that trade. It's the dollar amount you're going to risk. Tradervue doesn't attempt to track your stops because as you're working, around a position, you may enter a little bit, you may sell a little bit, buy a little bit more, sell a little bit more. Your stops may move around, or you may actually have different stops for different pieces of your position. But what's always constant is you'll always have an R value. You'll always have a maximum dollar amount you're willing to risk on a particular trade. And we can normalize your performance and report on your performance based on that.
So when people say R1, R2, what is that?
That's probably something different.
Okay.
Yeah, you're probably thinking of pivots. With R, you're more thinking about, I'm risking 1 to make 3 or something, right?
The risk reward, basically.
Yeah, exactly.
Okay, sorry, I confused it with something else, but please continue.
We actually have a blog post about risk. Let me pull it up so you guys will be able to find it. This is actually probably a super quick and handy way to find it. So our blog has tons of articles about the sort of features and things in Tradervue. I would encourage you to browse through that if you want to learn more. But here's an article we have about risk tracking, so you can search for that and find it. Okay. This green bar up here too on the trades view and actually throughout the system, I should mention, this is the filter bar. So the idea, I have it filtered to just show intraday trades right now. Maybe I also want to just show trades that are tagged with, you know, breakouts, which is one of the tags that I use. If I enter that in and say filter, now I'm just looking at intraday trades that are tagged with breakouts. So this is, if you haven't used filters before, this is a super handy way to sort of narrow down what you're looking at. And when I go into the reports, this filter will still be there and it'll still be filtering. So I can report on just a small subset of, small subset of trades if I want to. So I will turn that back off.
So
and
if you enter a filter up top and then you go over to reports view to look at your win-loss ratio, it's going to be showing you the win-loss ratio just for that filter that you have on until you hit the clear button.
Exactly.
Yeah.
Okay. So let's actually head over to the reports view now.
This is the good stuff.
Okay. So there's a bunch of different tabs here on the reports. I'll just start flipping through them a little bit, and then we'll go through like some scenarios where, you know, I have a question about my trading and I want to drill down and try to understand what actually happened. So the overview reports are sort of just that, right? This is sort of some high-level kind of low-hanging fruit stuff. So these are the report groups. These are, you know, different reports I can do. And then for this for the recent group, for example, there's some options here. But for example, yeah, I won't belabor this because you can look at it and see what it is. But sort of daily P&L, cumulative P&L for the last 30 days, volume for the last 30 days, win percent. And by the way, when we say last 30 days here, this is the last 30 days that you made trades. It's not the last 30 calendar days. Year, month, day. Again, this sort of just breaks down performance by year or month or by day of the month. Again, sort of low-hanging fruit stuff, right? Calendar is pretty cool. So if we go to the calendar and select a year and go down, we'll select, say, a month that has some green and reds on it. This shows you on the calendar your P&L and number of trades you made for each day in that month. So you can pretty quickly come back and sort of review what happened. If I click on one of these days, it will go to the journal view for that particular day, and then I can see these individual trades. I can see the running P&L and all that. Okay. So that's it for the overview. See, told you that was easy. Now we'll go to the detailed tab, and this is where all the super detailed stuff is that can really provide insights into what's going on. So first we have the statistics table. This is, you know, I'm sure you've all looked through this before. If not, I would encourage you to do so. There's a help link here. If you click help, it will basically explain every single one of the items in this chart. So that's a good thing to do. If we scroll down a little further, we have 6 different report groups that are available on the detailed tab. So the days and times groups, for example, this shows my sort of distribution and performance just based on the day of the week, by the hour of the day, you know, by the month of the year, intraday versus multi-day. For intraday trades, what was my performance based on how long I sat in these trades? And interestingly, you can see, you know, trades I was in less than 20 minutes were generally losers for me. Trades where I managed to stay in them a little bit longer were winners. The price volume group, this is sort of like, this breaks out performance by the instrument price. So am I trading you know, a $200 stock or a $2 stock? Performance by how many shares did I trade? Performance based on the range that the instrument moved while I was in the trade. We will go on. The instrument group, this shows me my best and worst symbols. This is performance by instrument volume. So basically how many trades, if I'm trading, you know, Visa, how many trades did Visa trade that day? So for example, you can see I'm not so good with instruments that trade less than 500,000 shares a day. Interestingly, much better with ones that trade 25 million or more, which is, pretty high volume. A lot of people don't like stocks like that. This is performance by instrument relative volume. So how much did this instrument trade on the day I traded it versus its 50-day moving average? So again, in this case, I can see that my performance was much better with instruments that are trading more than 5 times their average daily volume.
Greg, can you say that one more time? I think I didn't understand. The performance of the instrument relative to the volume, the 50-day moving average. Can you repeat that one more time?
Yeah, so this is the instrument's relative volume. So let's say I'm trading a stock that, normally its 50-day volume average is about 2 million shares a day, let's say. This line, the 500% line, would be if that stock traded 10 million shares instead of the average 2 million, it would be in this bar, 500% or more. So basically, we're saying we're trading quite well with with stocks that are trading more than 5 times their average daily volume.
Okay.
So Greg, let me piggyback off of Jeff's question here.
Mm-hmm.
So I don't use Tradervue yet, not yet.
Oh my gosh.
I will eventually.
You're killing me, man.
No, I will. And this is a good demonstration because I only knew a little bit about what it does, and I can see it's very detailed. So immediately when you showed me this screen, I'll put up the screen, what I'm thinking is after trading for maybe 2 or 3 months or so, I can go back to this view and see where I'm most proficient. And I'm not sure. It's a question and a comment. Would traders usually look at this and then set their scanners to look for, these metrics that fit within their trading domain? So in a sense, so if you're good at trading stocks that have relative volume of, what did you say?
500%.
How many percent? 10?
500.
500, then you would set your scanner to find stocks that trade 500% or up, and you will probably do better. Is that logical? Does that work that way?
I mean, I guess it could. Keep in mind for this one, right, that this is relative volume that the stock does all day. So, by 10 o'clock, when maybe I'm running a scan, it probably hasn't traded 5 times its daily volume yet. So this is more, I would look at this more as the thing of I'm better at trading things that are trading dramatically more volume than usual.
Okay.
Right. So you could see this big red bar, actually all red bars for all the numbers under 100%. Plus it's trading less volume than usual. I'm not doing well. So the way I would look at this is I would say, you know what? I'm not good at trading, or I'm good at trading things that are trading on unusually high volume.
Okay.
And that's something I could add as a parameter in my scanner.
Nice. Okay. I just wanted to see if that's the logical reason. If someone would look at this and say, okay, I can make adjustments based on the results I'm seeing, and that would be the logical step to do is, okay, I'm good in this area, so let me do this. Thank you. Yeah. That's it. Awesome. Thanks.
Or if there's a trade you really like that isn't meeting your parameters, at least you're aware of it now.
Yes.
Right? So you could say, this isn't trading much volume. I usually suck at this, but I'm going to do it anyway. And here's the reasons why. And maybe I would write about that in my journal.
Good. Something stepped out with the first example you used, stood out, which was that when you stayed longer in trades, you did better, right?
Mm-hmm. Yeah.
So I if that were me and I saw this and that was my metric, I would say, okay, I'm in this trade. It's only been 5 minutes. It's not doing well. And that would give me comfort that, okay, if I'm still consistent with the way I've been doing things in the past, I just need to stay in a little longer and it probably would go my way. And that would relieve a little bit of stress.
Maybe. I would be careful with things like that in particular, in that it's possible. Let me actually go back to that chart just for giggles. So it's possible that trades that were going to go against me went against me quickly. So I snap them off within minutes, right? And then the ones that immediately went in my favor, well, maybe I sat in them longer and ended up making some money. So in that particular case, I would think about the chicken and the egg and make sure you know which one you're basing your decisions on.
That's crystal clear. Thank you.
Cool.
Hey, Greg, can I, while you're on the screen that had the 50% MA, okay.
Yeah.
When you're looking at these, like let's say I'm brand new to this and I'm now seeing the screen where it says performance by instrument prior day relative volume percent of 50 MA. And I'm looking at it, I don't have a clue what that means. Do you have like a definition, or like if you hover over the screen that pretty much is telling you what you're looking at, or a kind of description of what it's calculating?
We do. At the bottom of every single report page, there's a help link. And if you click that, it actually goes into a bunch of detail about what every single chart on that page is showing.
Nice, thank you. I think I might have missed that if you mentioned it before.
Okay, I didn't mention it before, so I'm glad you asked. So actually, I should mention this one. This chart we were just talking about, this is basically what's today's volume while I'm making the trade. This chart right below it is what was yesterday's volume. So this line at the bottom, for example, this means yesterday's volume in this instrument was 5 times its average daily volume. And then I made the trade today. How did things go? So this is one of those things that's instantly actionable, right? In the sense that, this happened yesterday. Can I understand anything about my performance today? So we're basically looking for follow-on days. Yesterday was big volume. Does that have any impact on today?
Greg, this is a great example. Sorry. Could you analyze this chart with your trading and come with, give us some kind of theory on, maybe I should have traded on this day with the long, not with the short red bar?
Yeah, so this particular chart seems to, it's hard to interpret anything out of this without overanalyzing, I think. If we were to filter our data down, this might show a more interesting pattern. But what it sort of says is, everything below 150% is I think anything I say is going to be overanalyzing this. You could say like below this line is a little bit more than average, and below this line is sort of way more than average volume yesterday. But the fact that this one up here is red kind of kills any theory I might make about that. So I would be hesitant to draw too many conclusions.
Okay, I understand. Thanks.
Mm-hmm. So this is by instrument movement. How much did the symbol I'm trading move on the day I traded it? If it moved over 2%, then I made all my money. If it moved less than 2% or moved down, I lost all my money. This is performance by opening gap. So this is interesting, right? If it gapped up more than 2%, I probably thought I was doing good because that seems very exciting and, lots of momentum and action. But I actually wasn't. I did the best for small gaps, plus or minus 1%. Day types. This is, was it a trend day? Was it a range day? That kind of thing. This tells me sort of how did I trade those. Performance by ATR. I'm sure you're all familiar with average true range of instruments. How did I do based on the ATR of the instruments I was trading? This one's really interesting. How much had the instrument already moved as a percentage of its ATR by the time I finally managed to get in the trade? This one, I can definitely draw some conclusions. If the trade's already moved 2 times its ATR in the positive direction, and then I jump in like a big old follower, that did not go well for me. And then finally, by relative volatility, this is basically the ratio of how much has this instrument already moved today in terms of range divided by the average true range of the instruments. Sorry, I misspoke there. How much does it move today versus the ATR of the instrument? Basically, relatively speaking, what was the range of this symbol today versus normal? You can see when I'm trading instruments that are not moving as much as they normally do, I do poorly. And then I make all my money when I have instruments that are moving at least as much as their average.
Okay, Greg, so that top line right there, that means that on one day, the stock traded 25 to 49% of what its normal ATR is.
Yeah, so basically the total move of the instrument, which could have just been bouncing up and down, right? But the true range of the instrument divided by its ATR was less than 25 to 50%.
Perfect. We use that a lot, so that's great. Thank you.
Cool. Okay. So now I'll go to market behavior. This is a good one in the sense that I can see, what I think most beginning traders will tend to make trades with blinders on the chart they're looking at. And then you go to, guys who've been doing it a long time or professional traders, and they'll have like 3 other charts up, right? From, maybe the SPY or the Qs or something, other markets and other indicators. So this shows us performance based on a particular market that we select. So in this case, we're looking at our trading performance based on the movement of the SPY. So you can see we generally do better when the SPY is moving up rather than moving down. Performance based on opening gap in the market. Performance based on the day type of the market. So, again, we lose all our money when the market's trending down. Okay, I'm flipping through some of this fairly quickly now because there's a bunch to get through. This is the win-loss expectation tab. This shows us sort of our win-loss ratio, expectation. This is our cumulative P&L for all trades matching the current filter, cumulative drawdown as well. And then liquidity. This sort of depends which trading platform you're using. But if you're using a platform that reports this data to us, then we can generate reports. The idea of liquidity is, I may want to buy a stock, so I can enter like a market order, right, to buy that stock immediately and pay the offer. Or I can bid for that stock. If I bid for the stock and my order is immediately executed, that's considered to be a marketable order, and you're removing liquidity. And generally, you pay a fee for that. Same with a market order, you pay a fee for that. If I bid for stock and it's not immediately executed, but rather it sits on the order book and we wait, and maybe we get executed, that's considered adding liquidity, and we generally get paid for that. But you can imagine, that's 2 really different ways of trying to enter a position, right? I'm either going to bid and see if I get hit, or I'm going to pay whatever the offer is, and I'm going to get in this immediately. And we can look at performance based on that. Okay. Any of the trades as well can be run in either gross or net mode if you have the gold plan. You can look at performance in terms of aggregate P&L, so the total P&L for all trades matching this filter, or you can look at the average per trade. We'll come back to these. And you can also run the reports in either dollars, ticks if you're trading futures, or in R, risk. So, before I go to the other tabs here, let me run through like a scenario with you. And this is something that I personally find super interesting. So you can see, if we look in the hour of the day chart here, I traded a lot in that opening hour, right, at 9 o'clock. And I'm kind of curious, same with the 10 o'clock hour, a lot of trades. But I'm curious, how did I really do on the open, right? I'm getting up early, I'm preparing beforehand, I'm jumping in on these big crazy moves we see in the open. How's that really working? What's going on? Let's see what we can learn. So I'm going to click on this bar. And you can see we get a prompt that says this is going to essentially create a filter that shows only the trades that were in that bar. So I'm going to say, okay. Now you can see our filter is intraday only still. Trades opened between 9 and 10. So now I'm going to go back to the reports. So now this chart's a lot less interesting because it's only the 9 to 10. But now I can see, interestingly, I'm doing much better on Mondays than I am any other day of the week. And I find that somehow interesting, right? Like maybe I'm well rested, maybe I did a lot of prep over the weekend, who knows, right? But let's dive in there and see what we can learn. So we'll click on this bar and we'll say, okay. Now our filter is more narrow, opened on a Monday between 9 and 10. So we'll go back to the reports. Okay, now these two charts, both less interesting for sure. But now we're just going to flip through and see what we can find, right? So, so far not seeing anything so amazingly different. We'll sort of start flipping through these, see if we see any patterns. For now, I'm going to skip through to the liquidity tab. And the thing that jumps out at me is this bar right here. It's like, holy cannoli, all the money here I made when I had 0% of my entry shares adding liquidity, right? That means basically I was paying the offers to get into to long trades or hitting the bids. You can think of it as, these might not have been market orders exactly, but you can think of it as sort of the equivalent of a market order. Jumping in, being very aggressive with my entries. But, this bar looks nice and long, and that's cool, but this bar is super long too, which means I just made a lot of trades. Maybe this bar is only so big just because I made a lot of trades and they all had a tiny gain. So let's go up here and switch to per trade average. This way we can see if it's really better or if I just made it up in volume. So now we'll go back down, and you can see this bar really is better, right? It's sort of, now, there were a lot of trades like this, but every trade was, markedly better than all the other ones. So what I can say from this, and, you have to be careful, you have to think about your own performance before you draw conclusions based on things like this. But I can say that, in that opening hour, my performance is best when I'm aggressively entering these trades. I'm not monkeying around trying to get somebody to pay me. I'm aggressively entering these trades. And then now that I know that, I can go back and think about that in the context of my other trades and my overall performance and see if I can learn something and see if there's any changes I want to consider.
Greg, sorry, you've raised the question. Oh, sorry. Go.
That's awesome. I just wanted to recap real quick for everybody. He basically looked and saw that his trades in the particular area were best from 9 to 10. So he just drilled down into the 9 to 10 o'clock hour specifically, and then used all the other data points that the TradeNet has just for that 1 hour and got way more specific drilling down that way.
Yep, exactly.
Wow. You just read my mind, man. Could you actually drill down? Because as you were drilling down, you went to Monday. There was less red on these charts. Can we just use yours as an example? Drill down to your absolute perfect trades period, where there's the least red. I just want to see how this helps us better fine tune our trading skills. You were just doing it. You saw the long bar for Monday intraday.
Yeah.
And you drilled further down. It's great. I like this a lot. It's cool. Yeah.
It's just you mentioned like the least red, right? It's sort of hard to tell. You have to start somewhere. Mm-hmm. So I started on one that was, what the heck happened here? Oh, I started somewhere where I did see a big blue bar and I knew what that bar meant. So I started, I sort of started drilling down from there. If I wanted to look at just my winning trades, for example, I'll actually come back to that in a second. So sit on that question for the moment. Okay, so flipping through, so I don't keep you guys all day long. I'll start flipping through these tabs here. The next one is win versus loss days. So, and this chart has all these same report groups here that we saw before. What we're looking at is, and it also has two different statistics tables. What we're looking at here, the blue side is, these were all the trades I made on days that were overall winning days. And these were all the trades I made on days that were losing trades. Sorry, all the trades I made on days that were losing days, right? So remember, even losing days have winning trades, but overall on the day, it was a losing day. And then I can go down and compare, all these different things. So on Mondays, I can compare winning days and losing days, right? And this is as we expect, obviously, right? Winning days will have positive P&L, losing days will have negative, but I can compare any of these different statistics broken out by winning and losing days.
Why does it look like a mirror of each other? It seems like, I don't know, you're as good as you are as bad. Or am I not understanding those charts?
You are. I think it's because if we look at our total, our winning days gain loss and losing days gain loss, they almost cancel each other out. So the overall gross P&L for the set of data we're looking at is roughly 0.
Okay.
And that's just sadness for the trader as opposed to a certain report thing.
Got it.
Okay, so if we go to the next tab, the compare tab, this is where instead of comparing winning and losing days, we can make 2 groups of trades and compare those 2 groups. So for example, these are some quickies, or we can compare any groups we want down here. We'll just pick like long versus short. Now we are looking at long trades in blue, short trades in orange, and we can go down and compare sort of, P&L here. We can see our total P&L, for example, is better for long trades than short. And if we scroll down, again, all of this data that we have has 2 bars on each chart, blue for long, orange for short. So, back to your question a little bit a while ago about winning versus losing trades, I can separate those here. So now I can just see winning trades in blue, losing trades in orange. And then I can drill down to, say, the liquidity stuff we were looking at earlier. And we can see, okay, what's really going on here? Are there any sort of, super long orange bars and short blue bars? And I can sort of think about that in the context of all my winning trades versus losing trades. So basically the blue we're looking at here would be the longest blue bar in the context of what you were talking about earlier.
So the other method you were using gave us more info than this, even though this one has more data. Because from this, it seems like you trade well throughout the week, Monday, Tuesday, Wednesday, see that? The other one, your Monday, long bar, period, nothing else.
Well, I think it's being separated out now, right? So the other one was basically the blue bar plus the orange bar all shown together on one bar. Now we've separated out the blue bar and the orange bar. So I can see sort of, maybe, see, I don't have any canned stuff to point out quickly. But basically we can sort of separate out, and I can see, actually, if we go to average, maybe that will tell us. So here, for example, right, we can see our average winning trade for stocks under $2 is much bigger than our average losing trade. That doesn't necessarily mean we're good at stocks under $2, but it does mean our winners are bigger than our losers, if that makes sense.
Hey, you guys, just real quick in the interest of time for Greg, and we're going to have a quick Q&A at the end if we have time for it, but if we can just let Greg kind of get through the rest of these points right here, and then hopefully we'll have time for a Q&A, maybe write the questions down. But yeah, go ahead, Greg, sorry.
Okay. I'll finish up pretty quickly so we can get to a cool Q&A. Here's the tag breakdown. So remember I mentioned, always tag all of your trades with the setup, for example. Part of that so you can filter and look at just performance for one setup, but also the tag breakdown chart can show you data as well. So for example, in this data set, I have earnings as one of my tags. This was basically earnings trades that I made, which is, trading in the morning right after an earnings release the prior night or that morning. You can see I made a whole bunch of trades. And I remember this actually thinking, I remember thinking that earnings trades were my thing. You know, I got these things, I'm going to nail them. They're going so well. And I look at this data right here, and clearly that's not the case, right? Earnings trades are not the thing for, I'm not trading them nearly as well as I thought I was. So this is sort of, you know, an easy chart to slap you in the face with which setups are working and which ones are not. And then I'm going to flip over to the advanced tab. And this is one where people look at this initially and they're like, oh my God, what's this is showing me? And then they go to some other tab.
That's what I did. But this is cool, guys. Check this out.
Yeah. So basically we're plotting each of your trades on this chart. And what we're plotting on each axis we can choose. So here we're plotting P&L versus trade duration. How long was I in the trade? And then green dots are winning trades, red dots are losing trades. So for example, I can look at, you know, here's P&L by day of the week and time, right? And I look at this and I'm like, oh, I'm not sure this is really showing me anything interesting at all. So, and we can pick, we can make any chart we want to. I'm going to show you one in particular, and that is trade drawdown stop analysis. So what this chart is showing us, let me walk through this. This is worthy of discussion. So on the x-axis, this is trade index. Basically, we're just saying we're going to give every trade a number and we're going to plot them all evenly across the x-axis, right? We're just trying to spread them out. On the y-axis is position MAE in dollars. This is, remember, MAE is max adverse excursion. This is how far did the trade draw down. How far did it draw down on us at any point during the trade? Then we have scale data points by P&L. So what that means is big red circles are big losses. Small green circles are small gains. Okay? So what does this trade tell us? Well, I see a bunch of red dots, a bunch of big red dots down here. I see a bunch of green dots up here. And the thing that jumps out at me is, let's look at this line across at, say, $150. Everything below that $150 line is red, and a lot of that red is really big. So what does that mean? That means every trade that at some point drew down more than $150 against me turned out to be a loss, because everything down here is red. And a lot of them turned out to be big losses, because a lot of these are big red circles. So let's think about that for a second. What if I had changed my stops? You know, some of my stops might have been $50. Some of them might have been $300. But if I had set an absolute limit on my stops of $150, so basically no trade would ever be below this line, my overall performance would have been better. And I know that because there's no green dots below this $150 line. No trade ever drew down against me more than $150 and turned out to be a winner. That's what this chart means.
And so that little tiny red dot
This
below 50.
Oh, this one?
To the right. Oh, yeah, I didn't even see that one, but yeah.
I didn't either. I was just wiping my screen to see if that was real. Yeah, so like this one down here, this means I let a trade draw down against me $450, and it eventually came back and closed for basically a scratch, right? You know, maybe that was a good idea, maybe it wasn't. But that's why the dot could be way down here and so tiny, is it did come back. But it didn't come back to green, and generally nothing below the $150 line ever came back. So when I was pardon, what was that?
You're negative that amount at some point during the trade. This isn't what you closed it at.
Yep. But you can see that the chart slaps us in the face with the fact that, you know, there's no reason to let any of these trades draw down more than $150, because not a single one of them made a nickel.
That is awesome.
I found that one very interesting.
Wow.
On those bubbles, can you see specifically what that trade was?
Yeah, unfortunately you can't click on them, but you can download this to Excel if you want to, and every one of these dots basically all the data that makes this particular chart will be in that little download.
Okay.
Hey, Greg, I got a quick question. A moment ago, before we came to this part, on the bottom, you had it in minutes. Mine is in days. I didn't see minutes available for.
Oh, it's probably because of your filter. So if you switch your filter to intraday, okay, then it'll probably just be minutes then.
I see it now. Thank you.
Okay. And actually, yeah, never mind. So I'm going to flip over to the Trends tab, or the Trends group on the Advanced tab. So what we're looking at now is, let's change this to daily. That's less interesting. So I'll just leave it on this for now. Actually, let's go 50. There we go. So what we're looking at here is we're charting win percent as a 50 trade moving average. So, we can look at this and say, okay, this would have made a much better demo if this line was like going up or something. But basically, we're looking at 50-day moving average of our winning percentage. I can also change this to a daily moving average. So I can say 50-day moving average. And this data after here is less interesting. So the chart is, actually, let's change our in date. One. And change this back to daily. Okay, here we go. So here's our win percent as a 30-day moving average. And you can see started out okay, came back down, and then we had a long period where basically our winning percentage was going up pretty consistently. So that was nice. It might behoove us to go back and look at, what changes did we make in our trading over this period, and try and understand, was that a fluke or was that actually working for us? And there's other things we can look at too as a sort of as a trend, right? We can look at P&L, we can look at MFE and MAE, things like that. So that, my friends, is everything I was going to go through. So why don't we open up to questions?
All right, so a couple of guys in here, Greg, are from our, I guess, junior varsity group and varsity group both all together. So,
oh, come on.
Tradervue, Tradervue is completely free, guys. Now there are some dynamics that he's shown that are upgradable, and just so that I share with you all, I think I've touched bases with Greg at the beginning of January, and I went with the goal, and I don't want you to change the prices, Greg, but I am greatly appreciative of the price that I got, because not only have I found it extremely useful up until this point in my trading career, now that you show some other things, I mean, I'm completely blown away. So definitely for you guys, if you're not trading more than 100 trades a month, I mean, it's a free resource at minimum, and then it just gets better if you decide to upgrade a little bit.
Well, thanks. I should mention a bunch of the stuff we've shown, like these reports on the Advanced tab, for example, are only on the silver and gold plans. So you won't see them on the free plan. But we do have a trial, so you can always try it out, see if you like these charts, or at least just see them after you get some data imported for a few months, and then you can make your own decisions.
Yeah, Greg offered that to me via email a long time back. I don't know if you remember, but he told me that I could sign up for the free trial and cancel. He basically told me how to do it, where I could get in there and see the what the paid version looks like, and not have to pay any money. So, but I did get, the results of that was a week later. I bought a subscription. So, but yeah, just one of my favorite things, besides some of the charts, is the ability to upload pictures to my trades. But as you can see, there's way more stuff than just that. So I found it super worth it to upgrade.
Yeah, and some people like myself go crazy with the pictures. So, for example, this is a real trade that was recent. We haven't seen it because it's not intraday, but basically, every time I adjusted the trade, I would upload another picture from Option View, sort of showing what's going on. So you can definitely sort of add whatever you want to your trades.
Yeah, I do the similar. I have trades where on the day of, where it's got, you know, the date of today and then maybe like the 15 trades you took below that. Up at the top where you write the overall notes of the day, I have started uploading the SPY chart for that day, as well sometimes as YouTube videos that I was watching that morning, or something that I want to, a YouTube video I want to remember, that'll be part of my overall daily upload.
Yeah, that's a great idea. Actually, two things about that. One thing, you guys are mostly trading intraday, right?
Yes.
Okay, so if, for example, if one of the things you watch is the actual tape, you know, the time and sales and the level 2, if that's one of the tools you use, consider doing a screen recording of your trading screen for the entire day. And I burned through some like serious hard drive space doing this when I was trying to learn to do this. But what I would do is, if something interesting happened during the day, like that Visa trade I was lamenting, I would actually go back, I would cut out that piece of video and I would save that. And then I could really go back and say, you know, what was I seeing on the tape when I was making these trading decisions? You can really go back and sort of relive that. But the nice thing about recording just constantly all day, every day, is if something happens, you know you have it recorded and you can go back and see it again.
How did you put that on Tradervue? Did you edit it and cut it? Was it on YouTube?
You know, I kept those local. I just put a link to my NAS for those. I didn't upload them anywhere because I never really intended to share them with anyone.
Okay.
And then the other thing I was going to mention was, you mentioned uploading the SPY chart. You can always add that to your charts by adding a comparison symbol.
Oh, wow.
So here, all right, well, that sucked because I don't see it. Oh, okay, what a loser I am. I'm actually looking at a SPY trade.
You're already on the SPY.
Yeah.
I was wondering what.
Okay, we'll try and make this more interesting now. SPY. There we go. So here's sort of, you know, what the SPY was doing, you know, while we were in this particular trade.
Wow.
I see. So overlap. Okay. Comparison.
And that should work on these as well.
All right, I'm convinced.
I love hearing that.
Welcome back, Vic.
Talk about coming back, Greg. I guess we have about over 20 people in this group on this call, and about over half of them don't have Tradervue. Is there any special discounts that you could give this group?
Oh boy.
Good question.
24 hours special discount?
You know, the only discount we have available, and everyone on the call will tell you the same thing, is if you want to switch to yearly billing for the gold plan, it's effectively 20% off the monthly price.
Like, just do the gold, guys. I'm telling you, just do the gold. just do the gold.
And if you want to switch to that yearly billing, just email us after you do your trial, and we can switch you over anytime.
I have a question.
Mm-hmm.
Is there any way to generate a report of all the data that is collected? And maybe the system may make recommendations based on the information that was collected, like, you know, failed opens, you know, or just putting everything together into one report with a recommendation based on, you know, your history of trading.
Yeah. No. Is the simplest answer. So you can go to the trades view and, for example, export everything you see in the trades view to Excel. If you want to like create reports or charts or something that we don't have, and we have some people that do that for occasional reports. We don't have anything that will sort of look at your overall history in aggregate and try to make recommendations for you. It's an interesting idea. It's definitely something we've been thinking about, but it's sort of, I don't know, it's a slippery slope, right? If we make a recommendation for you that turns into a terrible trade and you lose all your money, you know, we don't want to be the ones behind that. So at least at the moment, what we do is provide you the tools to analyze your own data and make your own recommendations.
Yeah.
We don't try to sort of push you in a certain direction.
One thing I'll tell you guys, for me, and I think this kind of answers Sean's question earlier. The simplest way is you're going to get out of this as much as you put into your journaling. So watch. I tag everything very specifically, right? So if I ask the group, what's one of my number one setups? What's the thing that I write on my daily sheets every single day? What's the first thing that I write every single day? The first number. RSI. If I go and do my tags, guess what my number 2 winning ticker throughout the year is? RSI based trades. So if you have 4 setups like failed open, RSI, fib, or held open, those are my top 4. I see that statistically, I trade best failed opens. That's my number 1 setup of the year. My number 2 setup is RSI. My number 3 setup is my fib, right? So you're going to have to, like you said, I don't know if it's 10,000 has to be the number, but you got to get trades in, even if they're paper trades. Like my family group, I tell them when you trade, when you put your tag in, put paper RSI and then regular RSI. That way, when you were paper trading, this is what your result was. When you were live RSI, this is what your result is. And you'll start to statistically see what you're good at, and then you just come back and do that thing that you're good at every single day. Now, my tags got to get better. I can already see that I need to do a little bit more, but I can see just from over half of my money, let me see, about 40% of my gains this year are failed open tags. 30% are RSI. So guess what I'm going to be doing? Failed open and RSI trading. Because if it worked yesterday, it might as well work tomorrow.
And to that point, a lot of times, especially with me, you will come up with a statistic that you realize you need that you have not been entering, and that could involve you literally going back to every single trade and adding that tag manually. But journaling has never been an easy task, but it's way easier with this than what these guys started out with, on Excel spreadsheets and Word documents.
Right.
So it's going to take a long time, but it's still easier it's not easy, period, but it's easier.
Yeah. I think, Sean, I looked at your trading plan the other day. So some of your dynamics in your trading plan, like whatever your thesis, like I think on line 2 or line 3, when you do that trade, right? If you do that trade 20 times, you go find out statistically, how did you perform that 20 times? And then you can say, hey, I think this is working for me. And then just keep doing that. But if it doesn't work for you, then you go to something different. And that's the value I see in Tradervue, because if you're tagging them correctly, all you got to do is go find that setup. It'll tell you if you did well or not.
And repeat and repeat. Thank you.
That's it.
Thank you.
Just to reiterate something you just said, actually, is I think it's in our nature to evaluate ourselves and focus on the things that we've done poorly or the things that we've done wrong, and try to improve our mistakes, right, is in our nature. But in reality, I think what's more effective is spend more time on the things you do well and do them even better, right? And if you really want to improve performance, that's sort of one of the keys that's counterintuitive for a lot of us, but that really works. One of the things, Billy, do you do any mentoring with your crew?
Sherman, I don't know if he's still on here. This group actually came together with, I started trading 2 years ago, kind of on accident. And a lot of people kind of consider me their mentor. And I guess I'm kind of de facto their mentor, but we just idea share really as a group.
Okay.
But I don't know that I'm technically a mentor.
We can make it official. We can make it official if you want, Billy.
Billy, do we need to give you a plaque or something saying you're a mentor?
No. I guess I am.
I'll just show you something in case you want to put the more pressure on him, and that is we have mentoring features in Tradervue.
Okay.
So if you go to your settings from the dashboard and you go to mentor settings,
okay,
you can invite someone to be your mentor. So you can just enter their email. They'll get an invitation. Once they accept, your mentor will be able to see on their when in the trades view, they'll have a little box right here with a drop down to switch to someone else's view, and basically they'll have a read-only view to your trading data. and they'll be able to leave comments on your journal
wow.
entry and your trades.
Okay.
And you'll be able to have private conversations just between you and your mentors, if you have more than one even.
All right, run me back through that again. That's going to be excellent, because I'm gonna be honest with you, Greg. One of the reasons that I've been reluctant to put too much in my notes is I don't want everybody to know my sauce. Now in a group, everybody share with them. Like when I do recap videos, they're very bland. I'm not really telling you about thesis and anything. But the group, if you're telling me that I could document and the group can really see, I guess, in depth, whereas it's not necessarily the same way what's public. Can go back to search blog mentor.
Yeah, so these are just some pictures of how it works.
Okay.
So what you just described would actually be the reverse. The typical thing would be you would become a mentor for a student and you'd be able to see their data. But you could do the reverse. So you would invite all of your people to be your mentors, and they'd be able to see your data and leave comments privately.
Okay.
But the way it works, you invite people and you'll see your invitations. Once they've accepted, you'll see a list of your mentors. And then down here, this is what it will look like. So this right here will be when you're looking at your own data, you'll just see view me, and everything will work exactly like it does now. If you want to look at someone else's data, you would just choose something else from the drop down there. And now I'd be looking at Young Jedi's data.
Okay.
And once you're in there, it looks like there aren't any pictures of how it looks. But once you're in there, you'll be able to, down here, you'll be able to leave comments and things. Oh, you know how you can have comments on shared trades right now?
Yes.
The same functionality is there, but you can have comments on trades that are not shared. They're just private. And you and everyone who has permission to see that trade will see them.
All right. So walk me back through where I need to click that at. I missed the very first part of it.
Yeah. So go to dashboard.
Dashboard. Okay.
And then settings.
Settings. There it is. Okay.
And then you would go to mentor settings. And remember, because it sounds like you might want to do things a little bit backwards or reversed. So remember, the mentor will have permission to view the mentee's data.
Right.
So if you want everyone to see yours, you would invite them as mentors, if that makes sense.
So we can pretty much just give each other mentorship. So I would invite him to be my mentor, Billy, and then Billy would invite me to be his mentor. We see each other's data and we're set.
Yep.
Okay. Thanks.
All right, that's gonna be big for the group this week. We gotta make sure we get that done this week. Jeff,
I'm signing up right now.
Okay. All right, so mentor settings. Okay, so invite a mentor. So when I invite a mentor, they're able to see my things. Is that correct?
Yes.
Okay, so they would have to invite me so that I can see their things.
Yep. Exactly.
Gotcha. Okay. Okay. Gotcha.
You might just try it with one or two people first and get a feel for how it works, and then decide how you want to sort of go across the whole group.
Okay.
I'm sorry, someone asked, is that available for silver and gold, or is that for all levels?
The mentor-related stuff is all silver and gold.
Okay.
Thank you.
Excellent. So, does anybody have any other questions that they can think of?
Oh my gosh, we ran out of questions.
Typed in the chat that we missed, maybe?
I was kind of keeping up with the chat until my mic broke, but I think we're good.
Okay.
Man, this is amazing. I actually just saw one of my stats that I hadn't paid attention to all year, and I was excited. Both what I've gained and what I've lost for the year, I just saw for the first time the total what I lost for the year.
Yeah, again, just as a wrap up, I think this is one of the best parts of journaling. It's not just entering your trade and making a note and a tag and then moving on to the next day. It's digging through here and data mining what you have after you've done it. That's where the good stuff really comes in. Just posting the trade, uploading it, and writing a sentence or two. I mean, that's kind of easy. You could almost get that from your trading platform, maybe, I don't know, but it's using this reports view page and stuff like that where can get the huge value.
You know, I just thought of one more thing that I'll mention, and I got this idea also from Mike Bellafiore at SMB Capital. What would be a good trade to show you this on? See, this is the problem with thinking up these ideas in the middle of nowhere. Not that one. So, shoot, I did a presentation. I had a great example, and I forgot what it was. But the idea is, think about. All right, well, we'll just use this one because I'm sure it's super exciting for you guys to watch me flipping through a bunch of trades and not know what I'm looking for. So the idea is look at a trade where, you know, on this one I lost $14, right, on $30 of initial risk. You know, it's interesting to look at a trade that maybe it was a winner and say, you know, given all the parameters that I had around this trade, this is not a good one. You know what? Let's actually go back. I can't see my tabs because this meeting thing is up there. Is this it? I just want to find a trade where I won a little and could have made a lot more. Let's try this one. Shoot.
I got a good one if you want to look at one. I got one from yesterday.
Okay.
That's a little bit.
Is it shared?
Let me click share now. Let me try it. Yes. And desktop number 2. Let's try it. See if we can get it on there. Y'all can see my screen?
Uh-huh.
And let me bring it over. All right. And it's KBSF. Let's go into it. Okay. And so this one I was out right at the 5, but there was another 10% down from there.
Okay.
How do I make it a little bit big? Can I make it bigger?
Yeah, just click that little magnifying glass.
Sorry. There we go.
Okay. So every now and then, I think it's interesting to look at. Let's say you made $1,000 on this trade, okay, and let's say, you know, for you, maybe the next level might be you would like to make $5,000 on a trade, let's say, okay? Everybody has these numbers for themselves, but sort of think about that sort of stretch goal about, I would like to be making $5,000 on a trade, or I'd like to make $10,000 a day. Maybe that's my trading goal, okay? So the thought is, if you record enough information, look at these trades and say, okay, given the amount of risk I was willing to put on this trade, right? Don't increase the amount of risk necessarily to try to make more money. Just say, given that risk, and given what I knew at the time, see, now obviously I know this trade was going to drop another 50 cents after I got out of it, right? But I didn't know that when I was in the trade. But think through the trade now and say, okay, you know, given what I knew at the time, how could I have made more in this trade, right?
Okay.
So, you know, instead of necessarily exiting when I did, how could I have stayed in it, or should I have stayed in it? Did I make exactly the right decision? Or, you know, in this case, right, maybe as it dropped below 5 1/4 there, the low of the prior day, maybe instead of covering, you know, just sort of think it through based on your notes and things. Maybe I should have doubled my position at that point, right? Maybe not, right? You're definitely a much better trader than I am, but you could sort of think through decisions that you made and say, could I have made a different decision here based on the information I had, and how would that have turned out? And the exercise, not necessarily to do every day, but go through the trades of one particular day and say, is there a way I could have made it to my goal? Maybe my goal was $10,000 a day. Is there a way I could have potentially made it to that goal? And actually write out the steps, right? Say, you know what, I'm gonna add here, and then I'm gonna cover a little bit more, and here's why. Here's why I'm confident doing that. I'm not going to increase my risk beyond, you know, $500 or whatever my risk was in this trade. So it's sort of basically, lay out the scenario you'd like to reach and see what you could have done to improve, and actually, write out all the steps. And that gives you another rep. But it kind of, it kind of gives you a base of experience to come back to next time you're in a trade like this, and perhaps trade it differently, maybe trade it better. Just something to think about.
Yeah. I think that mentally for me, because it was at the previous, which is how I actually had my alert hit when it was at the previous day's after hours low. So I didn't want to stay, but oftentimes, like even at the beginning of the year, I would miss profit. So I started to figure out the pattern of why I was missing profit. So I've gotten a little bit better, but like in this scenario here, I guess my note would be, 5.2. If you saw a bid come back to 5.2, then close, or give it an opportunity to break the 5. When it broke the 5 and it went down to the 4.5, there's a fib there. Now you're at the next level of support on the daily charts. Now you can go ahead and get out. I mean, I guess that would be a good note to put in that one.
Yeah. Well, and also when you're running through the scenario for this trade, right? When it popped back up to 6, maybe we could have got short again.
Come back again. Okay. Right.
Yeah.
Right.
So anyway, I'm not saying that, you should have traded this differently. I'm saying, for trades in general, it's worth going through and thinking through, could I have done different things to reach my goal in this trade that I didn't actually do? And in this one, it sounds like you traded it exactly as you planned. Maybe there were other ones where you didn't.
Okay.
It's probably more interesting for less experienced traders.
Hold on a second. Hey, go make sure Skylee's got shoes on. Hurry up.
I got my shoes on.
Yeah, I put on. At first, I thought somebody was telling me to tell my scouter to go put some shoes on. Upstairs.
Oh, man.
Man, good stuff. Okay, good deal.
All right, Greg. Well, I don't think anyone else has any questions that I can see popping up. So thank you for your time, and we really appreciate it. I think we're going to get great use out of this. We'll discuss this as a group, I know, after this call, whether it be today or on Monday. But just really, really appreciate you taking the time out of your day to explain some of this stuff to us, and now we can get the most out of what we're already paying for anyway.
Yeah, definitely. Cool. Well, I'm happy to have come. Thanks for inviting me, and hopefully it will be awesome for you guys.
Thanks, Greg. Appreciate it.
Sure.
Greg, you have my personal thanks as well. Thank you.
Much appreciated.
You bet. Thanks, guys.
Thank you.
All right, cool.
Have a good one.
You too.
All right, guys, it's 10:30 my time in Houston. I can stay for maybe 20 more minutes if you guys have any particular questions. I know that a couple questions on the Tradervue I had some answers to. Like I said, with the tags, I think that's where you're going to find your best value with identifying whatever your setup is. All right, and I got a new setup, so I'm tagging it a little bit differently, but I think that'll help a whole bunch.
Well, I missed that last part. What was that, Billy?
I was just saying that the tags, I think that the tags, at least for me, have been the most beneficial as far as figuring out what things I'm strongest at, as well as when you have tags and you see that you're not doing as well. Like I think Ben has finally come to the conclusion that, hey, trading at the open doesn't work for me. But had he been trading at the open and looking at that first 30 minutes and seeing his results in Tradervue, I think that would have also helped versus me just arbitrarily saying, hey, don't take a trade the first 15 minutes, guys. It'll be other trades. Well, it's one thing to say it, but then when you constantly see all of those missed opportunities and then you take a trade at the open, it doesn't work. If it doesn't work for you, it just doesn't work for you. And I think that one of the things that Greg mentioned earlier was find a thing that works for you, right? I mean, we all trade a little bit different and have some ideas about some setups, but each of those setups are going to be a little bit different for each of us because we have different personality types. But you won't know it, unless you actually do it, and then you're like, yeah, RSIs don't work for me. So maybe MACD works a little bit better, or maybe the money balls, or maybe the ADX, or maybe the VWAP, or whatever the particular thing is. But you got to get that data plotted so that you can see. And I think I remember I was telling you guys, like I was doing 20 paper trades minimum the first time I got back from the very first conference, that first month, that October when I got back. Like, and I'm telling y'all, it was at least 20. It was oftentimes 30 and maybe sometimes more. But through that, I'm writing all of the stuff out, kind of like how John has that. Where's that tablet at, John? John's got like that tablet where he's got all this stuff written out. But the repetition of doing it, when you keep seeing that, hey, this thing doesn't work. Like when he was going through it, I looked at the 2% gaps. So I know my scanner is one thing, but everything 2% gap down or gap up, those were very good results for me. And I didn't even know it because I don't tag them that way, but I could see it, you know, on the breakdown situation when he was going through things. The 2% either direction were good situations. So that might be, now that I see it, now maybe I draw my attention to that specific thing. I think like Sean was asking, do I set a scanner? Well, if you set a scanner, I mean, if the 2% gaps work, and there's a scanner parameter that could potentially be used when you start to prep and create yourself a watch list.
Exactly. And I think, you know, there's two different sets of data there. There's the data that the computer can recognize on its own, which is what time of day do you trade the best, you know, the drawdown, all that kind of stuff. But then there's data that the computer cannot know, like the setup that why. That's up to you to enter that stuff. So those two combined is what makes the overall picture and the journal useful.
Yeah. There's that thing felling below the SPY line too. Look at that. Right on the day. That's sweet. All right.
I didn't know that.
So thanks for the demonstration. Loved it. I came late. Sorry, I wasn't aware you guys were having this going on.
Yeah, I recorded it, so I'll have the recording of. Actually, I may just post it straight to YouTube. That way, it's available for both groups.
Right on. I just wanted to ask. I'm sure a lot of us want to see some of your plays from this week or last week on Thinkorswim. I don't know if I missed it by being late, but if I haven't, please, can you put us through your plays, bro? Please, Thinkorswim.
This last week has been on the sick side.
Blessed, man.
But so here is trying to find the chart. There it is. Here's KBSF one. All right, so I'm already going. I thought it was 650, but it was relative. I shared with everybody pre-market when we saw the gap up pre-market. So again, this is a 2% gap up situation at least, and then it shoots up and shows resistance at this fib up here. All right, wick down, let's go. There's the risk, let's get paid. There's the target, 456, got him. I didn't get that low. I got out again at the 5 when it bounced off of the 5, this is yesterday's low. We started touching yesterday's low and not releasing. I went ahead and got out. So, I mean, literally 6 minutes later, a little more patience gets a flush down, but the liquidity was bad. It didn't even clear 400,000 the whole day. So naturally, this time of the day, it might have been 160, 180. And I'm CFD in it, so that doesn't matter to me over there. But the point is, with this low liquidity, it can do this very quickly. Look, 369 and move the dollar in 9 minutes. So we're winning. Do we want to give a dollar back? No, we got to take profit there. If more liquidity, maybe I try to stay for the press through 5. But yeah, that's that. What's up, Batman? I'm gonna turn off the recording real quick. Hold on, guys. Let me turn because the rest.